Good afternoon, everyone. Thank you for joining us for our C-Suite Connect webinar during the lunch hour. We truly appreciate that you taking the time to spend your lunch time with us. Now, for those of you who are joining us for the first time, the C-Suite Connect is a series where we bring listed companies directly to our retail clients in both Malaysia and Singapore, giving you the opportunity to hear from the management and better understand their business and strategy. Now, throughout this series, we'll be featuring companies listed on both the SGX and Bursa Malaysia, covering a range of industries across the region. Now, before we begin, let me briefly introduce myself. I'm Billy To, the Regional Head of Retail Research at CGS International, and I'll be your moderator for today's session. So today's session will be insightful and useful for everyone joining us. Just a quick note, after the session, I think about a week or two later, our team will summarize some of the key takeaways from today's discussion in our research report, and the full webinar replay will also be available on our YouTube channel for those who would like to revisit the conversation later. All right. So today we are joined by LMS Compliance. So we have Dr. Louis Uy. He's the CEO and Executive Director at LMS Compliance. Dr. Louis, you want to just wave and say hi? Yeah.
Hi.
So for those who do not know about the company is an SGX listed testing, inspection, certification, and assurance services provider with core operations in Malaysia and a growing regional presence in Singapore and China. So it was founded in 2006, and the company started as a laboratory testing specialist and has since expanded into a broader compliance solutions platform serving industries such as, I think, the food, pharmaceutical, medical devices, and industrial products. So without much further ado, I'll pass the time to Dr. Luis to introduce your MS compliance to our clients. All right, over to you, Dr. Luis.
Thank you, Billy. Thank you, CGS, and thank you, everyone, especially GemCom, to arrange this short webinar to showcase my company, LMS Compliance Limited. For those that actually first time or heard about LMS, about our trade called Testing, Inspection, and Certification, TIC, right? Just give a very quick understanding. Anything that to do with the human being, like example, the food that you eat, the air that you breathe, and also the transportation that you take are all related to our trade. So I'm concerned there is a buyer or there is a seller, and you require TIC services somewhere in between to mitigate the quantity and quality of the goods that you import and buying export into the country. So TIC is actually to do with all our daily activity, including our lifestyle, including the food, including air, including waste. That's what TIC all about. Yeah, next. Disclaimer, I think is quite standard. So I take you through for the quick 3 minutes video for the corporate presentation of for LMS.
Welcome to LMS Compliance Ltd 2026 corporate presentation. LMS Compliance is an established TIC group with over 20 years of experience, enjoying high earnings visibility due to repeat customers. We operate at a regional scale with 3 laboratories, 2 certification bodies, 2 verification bodies, 2 AKINS licensing laboratories, and over 3,000 active clients across 10 countries. We employed more than 150 scientists and issued more than 1 million certificates. LMS Compliance operates across 5 main business segments. The largest is testing and assessment. Other segments include certification, trading, SaaS for decarbonization technology and assurance, validation and verification. Our services span across a multitude of sectors, including food, pharmaceutical, healthcare, and green tech. As of December 31st, 2025, our clients are spread across 10 countries, primarily in Asia Pacific. Key milestones include the group's founding in 2006. In 2024, we invested in prismatic technology, focusing on IoT and slope monitoring. In 2025, we acquired ACC Hong Kong to diversify into regulatory consultation for novel food and verified over 80 corporate and product carbon footprints. Also, Prismatic completed slope monitoring POC in Penang and Selangor. Our business strategies focus on workflow digitalization and digital transformation, emphasizing accuracy, agility, simplicity, security, and sustainability in our operations. SaaS transformation supports the group's decarbonomics blueprint by offering services such as AKINS, Laboratory Information Management System designed for ISO 17025 testing, AZENS, carbon measurement, reporting, and verification built for ISO 17029, AHORS, the decarbonization solutions such as monitoring and preventing landslide, flood, pollutions and emissions, and ISIN's, Global Real-Time Surveillance Mark. We are also focused on regional expansion, increasing our TIC and assurance services across the Asia-Pacific region to capture growing market opportunities. A core strategy is strengthening decarbonomics. We offer data-driven end-to-end services to decarbonize greenhouse gas emissions, supported by a science-based TIC approach covering Scope 1, 2, and 3 emissions. Our journey enabling decarbonization began with launching ESG assurance services in 2023. We are pioneer to provide carbon footprint in all certificate issued by us. In 2024, we launched carbon accounting workshops and adopted the ISSB reporting framework. In 2025, we obtained Duo accreditation as a verification and validation body from SAC and DSM. We won 2 ESG awards in innovation and governance. Thank you for watching this video.
Thank you. Thank you for watching. All right, take you through the overarching market space for TIC for those people that are new to TIC. Humbly, we are the first TIC listed in ASEAN, Southeast Asia, and we picked Singapore. Yeah. Look at the space of TIC. The market size is about 256.9 billion in 2024. It will go to 30 in the year of 34. It will increase to 430 billion with a CAGR of 5.2% growth on average. On a region perspective, Asia Pacific remain higher growth sector due to China and also the emerging market, ASEAN, that actually drive the demand of TIC services across the region. Segmental wise, testing services remain a bigger jump, a bigger portion compared to other division like inspection and certification. This is due to scientific quantitative data proven rather than qualitative verification and validations happen. The lastly is to show that actually this TIC no longer new. Our main 4 or 5 top tier competitor, is already leading the market at about probably 200 years or in a market, but their market share is only 9.1%. 9.1%, and less than 10% command the entire 400 billion market size. So due to this, the market leader like SGS is actually only command less than 3% market share throughout the entire TIC spaces. Hence, it gives TIC, it gives LMS a good and great opportunity for us growth in the region of ASEAN and to Asia Pacific, where the market is so fragmented and we have a lot of opportunity to do M&A and also licensing our SaaS to outreach as many as possible TIC player in the region right now. Next one. This company, overall, I think we are already here for 20 years. We are not 2 years or 3 years, it's already 20 years. So we are entering into a transformative journey right now. Just want to highlight on our assessment or numbers of issue of the certificates. We already hit more than 1 million, meaning we are never new, and we keep on improving and also innovating to provide better and wiser services in compete to other competitors around the regions. Next one. Business segment, you will have another slide at the end. We still remaining quite a big chunk for testing, and also you can see we term these SaaS under the decarbonization technology. This is our own IP. LMS hold this IP in Singapore, and we are using this to license and also venture into the low capex business development journey right now. Next one. Footprint-wise, we have operating in 10 countries. As I mentioned earlier, SaaS remaining one of the infrastructure that we share across the region player right now. So they are using our SaaS, the system to actually outreach and also engage the local community and client to board into our system, LMS system right now. Next. Key milestone, I think I just want to zoom in on the lower part, like Prismatic iHole. Yeah, Prismatic is 30% associate company and it gained some traction on new invention, patent pending invention, stroke monitoring. For those people that probably heard my presenter before, I think you continue your story. That's a very decent and good development with this invention right now. We are engaging Malaysia government, and then we also on 2025 July, there's a project called Proof of Concept. We installed a sensor in Penang, Balik Pulau, the place that produce Musang King durian orchard. Right? So I would say very fortunate. We got the data, yeah, because the stroke actually collapsed. So the stroke landslide happened in October 2025. So we capture the 60-day soil movement and also moisture movements during that area, that time, and be able to use this particular scientific data to prove that our technology work and can prevent. There's a pattern, there's a narrative in the data right now. So we are actually at a very, very good final state with the government to talking about the deployment of the stroke monitoring in the state of Penang and also in the state of the Malaysia right now. So luckily, the landslide doesn't incur any fatality or claim alive on that POC 2025. Next. Business strategy and future plan. This is our own apps, our own SaaS. iKin, iZen, and also you can see recently iHope already start getting momentum, for the entire applications to outreach our client, also not only client, our vendor, and also our partner are using a same system to harmonize and also increase the productivity. Just to take a note there, our productivity has been increased last year. Year before last year, about per head count, 165,000, touching 200,000 in year of 2025. So digitalization and transformation has actually proven higher efficiency, lower cost operation due to less paper being used and less mistake being done and less repeatability. And this is actually a very good so-called strategy taken by the group throughout past 20 years. Next. Regional expansion, I think in our offer doc, we already successfully integrate ACC from Hong Kong, Shanghai, and Hainan. And also we invested in Prismatic, as I mentioned, and we still continue to enlarge business opportunity in China by itself, because I think ACC still have some shortage, at a disadvantage where the resources, many resources that can outsource. So we are looking at other potential integration in China mainland, so that make ACC more complete and also competitive in terms of cost and also efficiency. Next. Carbonomics or carbon economics is always my forte and always my passion. Because my home is in Earth, I don't want to migrate in planet Mars. So we need to preserve, we need to protect our home together. And decarbonomics has been invented to use this for my future 2026, 25 SR reporting and also AR reporting. So I've been articulating decarbonomics, and this is a good platform or good marketplace that everyone also can invest for future. When you invest in LMS, indeed in your portfolio, you actually counterbalance legal non-conformance of your portfolio, because we are the one who safeguard the emission and also the climate change in your entire portfolio. So take some time, take a serious look at our portfolio. LMS become part of your portfolio because we can counterbalance non-conformity and non-conformance. Legal non-conforming in your portfolios. Okay, yes, next. Journey enabling decarbonization, we are not only talk, we actually walk through the entire journey. in our own pace. So I think just a couple of highlight over here. We got accreditation from SAC, Singapore Accredited Council, as the second largest scope of granting greenhouse gas verification in Singapore. And this particular certification status can be exported into region, especially in China. We are much more looking forward to be verified by Singapore-based company, especially we are listed, and then we are having this higher governance, trustworthy status compared to some of the local verifier. I think the most important thing, even though we just have some small one on the endpoint in 2025, that we want to the so-called ESG award, by AMMI, Medical Device Association 3. I think the most important thing that I want to stress is actually governance award. E is environment, S is social, G is governance. I keep asking my audience sometimes, say which one is more important. But for my own take, governance is most important, because if your governance is upside down, E and S is completely just a showpiece. So we are very focused on governing, not to meet or appropriate the minority stakeholder is always my forte and also my PhD project. Next. Financial highlights. I'm going to take you give you another quick 3 to 4 minutes video. Go ahead, Kevin.
Welcome to LMS Compliance, FY2025, Financial Results and Strategic Update. Our focus is on accelerating growth through ESG assurance and regional expansion. The executive summary shows sustainable growth. Revenue reached RM 33.63 million, a 32.5% increase driven by laboratory testing and the ACC acquisition. Net profit grew by 29.8% to RM 6.76 million, reflecting operational discipline. We propose a dividend of 1.00 Singapore cent. Diversified engines drove RM 8.25 million in top-line growth. This growth reflects a dual strategy: surging organic demand in healthcare and environmental testing, and the strategic integration of ACC. We achieved double-digit profit growth with sustained margins. Profit before tax grew by 20.8%, and net profit grew by 29.8%. Key metrics include a PBT margin of 28.0% and a net profit margin of 20.1%. Laboratory testing capitalized on healthcare and environmental demand, contributing RM 1.80 million in organic revenue growth. This was fueled by compliance needs across medical devices, pharma, environmental analysis, and green tech support. Inorganic growth from the Anchor Technology, or ACC, acquisition contributed RM 6.61 million in revenue. This acquisition, completed in July 2025, added new capabilities, including novel food certification, R&D, and quality consulting. Our strategic shift moves us from traditional lab testing to a comprehensive ESG platform. Key milestones include the ACC acquisition in July 2025 and the MYCO2 inspection establishment in October 2025. We are future-ready by establishing MyCO2 Inspection, incorporated in October 2025. Its mandate is inspection services for electric vehicles and goods, completing the loop for integrated compliance solutions. We are delivering value through an increased dividend on an enlarged share base. The proposed final dividend is 1.00 Singapore cent per share. Total cash payout increased by 19.0% to 1.37 million Singapore dollars in FY2025. Our market outlook is powered by regulation-led growth, driven by regulatory stringency, heightened safety enforcement, and growing emphasis on ESG compliance across global industries. Dr. Louis Uy, our Executive Director and CEO, stated that FY2025 was a landmark year, highlighted by 32.5% revenue growth, reinforcing our strategic shift to a comprehensive ESG assurance platform. We are committed to rewarding shareholders while reinvesting for sustainable growth. The LMS ecosystem provides end-to-end compliance, covering testing and assessment, certification, trading, SaaS, and ESG assurance. This comprehensive platform accelerates sustainable growth through integrated compliance solutions. Digital advantages, including SaaS for decarbonization solutions, are key. The LIMS, digital ISO platform, and real-time surveillance streamline operations, enhance efficiency, and provide global access to safety data. Technology enables scalability. Our summary investment thesis is based on a validated strategy: strong financial strength with 32.5% revenue growth, resilient demand protected by regulatory compliance, and committed shareholder returns with growing payouts. Please note the disclaimer regarding forward-looking statements. The company makes no representation or warranty as to the accuracy or completeness of any information contained herein. Thank you for viewing this video.
Thank you, Carmen. All right, just take a quick look on the scorecard. Yeah, revenue, we rose and not simple or double digit. It's actually a very strong double digit growth, 32.5% from 25 million ringgit to 33 million ringgit. Same thing go to the net profit. Yeah, net profit about 30% as well. If you actually look at the adjusted net profit, exclude amortization of ACC MA activity, the actual PAT is 7.2 million. 7.2 million. So due to the accounting standard, certain discount, certain treatment need to be done. Profit remain very strong. Yeah, our profit remain very strong. The margin still can stand at above 20%. And also the earning per share are improving by 17.6%, 4.08 to 4.89. And we're proposing the higher dividend payoff compared to last year. It increased by 19%. 90%. If you recount back the number of share that we increased to 137 million, indeed it's actually $1 cent per share. Okay, next one. Yeah, we constantly climb up the ladder. Yeah, for the past 4 years before acquisition, 24, 25, 24, 23, 22, and 21. We also can prove driving up through organic growth in Malaysia. And now with the Shanghai, China, big market, 1/4 of the population worldwide, we established another 18.6 CAGR growth throughout 5 years. Next. Up, as I mentioned, we have one slide to do the segregation in form of the service conditions. Testing remain major contributor, 76%. That also in tandem with the market research, which is probably more than half TIC as derived from testing, because scientific data, they are quantitative, not qualitative. For the certification and qualification, it has been increased significantly compared to financial year 2024, where we achieved 21% in total. Yeah, in total revenue. This is mainly based on consulting services and part of the service the certification, functional food certification derived from China. For this year's 2026, we are expecting the consultation services and functional food certification will be increased by double, and making testing less dependent. Okay. Training assurance should look at the SaaS as well, 1.5 to 0.6. We sell one SaaS, we provide one training, and we also do one assurance. Hence, SaaS and training and assurance tag along is about 2.1% of the group. And we are looking forward with those decarbonization solutions that we're able to market. SaaS will have a very good growth for 2026. For sales and goods remaining 0 or less % revenue, this is mainly we buy for own use rather than third parties. So own consumption. Yeah, so in terms of growth, on the left hand side, you can see laboratory testing growth, division growth by 7.16%, still single digit, but compared to the in 2025 landscape of uncertainty between the tension between the regional tensions, we still can clock positive single digit growth, remarkable for training assurance grow by 8%. Certification due to the integration by China, we grew by 1,000+%. SaaS remaining strong, yeah, compared to last year's. Next. For the landscape, why we are no longer depending on Malaysia space, looking at other space in China. The pie of China will be getting one time bigger compared to 2020 in 2026 expecting, because in 2025 we only integrate 6-month data from China, and so this year should be a better year than putting everything constant. It should be the better year compared to 5, where we integrate entire books 12 months into the groups. Singapore, I'm expecting good move and good traction in 2026 as well. As far as I'm concerned, one of our SaaS has been successfully registered under Net Zero platform, which is owner of Singapore Business Federation. So it proved that our SaaS is actually acceptable worldwide. Malaysia grew at 6.1%, Singapore 20.7% year on year, China about 100% compared to last year. We do have some very simple, very tiny revenue from China, but now we have actually more than that. Yeah, other country, other area grow by 92%, which is we are collecting, especially those services on in USD basis. Next, profit before tax. Yeah, same to the PAT, grow quite significant in 2025. Net profit, as I mentioned, this 6.4% is actually excluding the non-controlling interest of the ACC. So it was slightly adjusted from 6.8 to 6.4 fee of that basis. Next one. Other financial metrics, NAV, net assets value per share, increased by 16%. Cash and also cash equivalent also increased by 18.7%. And ROA, ROE bit contracted. This is mainly due to the ACC integration. They need time to actually leverage and also integrate fully. So we are already completed phase 1. So we are expecting phase 2 to be improved in terms of ROE and ROA in the next financial year report. Asset turnover quite stable, yeah, 1.5% different. Debt and equity, debt over equity and debt over asset are very, very low, -72 and -71%, mainly due to almost repaid all the debts and you invest on us, you invest on cash. It doesn't use loan or debts to grow the company. Yep. Next. Business outlook, yeah, quick one. I think the business outlook only have 2 slides and in 3 areas. Number 1, I think we are looking at seriously novel food. Yeah, novel food is actually very important to counterbalance or to reduce the or mitigate the tension, world tension right now, especially food supply on China and Singapore are so important. Hence, I look at the entire landscape, China experience. Actually, the experience can be imported, yeah, into Singapore. As far as I'm concerned, Singaporeans are quite used to the recycled water and also food. Hence, this is a very good space for Shanghai team to actually explore and import or bring company from China into the Singapore hub of the ASEAN to do master in the so-called R&D intellectual property invention, intuitive solution in Singapore. And we acquired Shanghai. We see opportunity also in ASEAN, especially in Singapore. Food supply that extract from waste, food supply that extract from the plant, remaining a very good outlook because this is part of the decarbonization as well. If the food are not consumed, rotted, actually you went to the landfill and actually having emission of methane. Yeah? If you actually can use the remaining residue of food waste generate the material for human consumption, indeed actually we are helping to decarb the emission. Second one is actually EV inspection launch. We are actually, if you really follow through our story past 3 years, we only operate in T and C. Yeah, testing, certification, and lately last year we have A, assurance, so TCA, but we never have I inspection, well, missing part. missing parcel will be completed this year, where we just don't want to focus on goods. However, we like to focus on more sophisticated, high-value market and also a high-growth market called EV. So we want to inspect electrical vehicle, and we can pivot to other electrical stuff as well. So that is our plan in 2026. Stay tuned for the announcement on this area. Next. Last thing is actually, we are transforming. We are no longer like what the research show. We are no longer traditional lab. Don't look at traditional lab. Right? LMS is traditional, very manual, very human, intensive, resource intensive, human intensive. But now actually we are using AI, we are using big data to actually make our analysts become less dependent. Hence, also increase their accuracy result, also improve the agility to returning the result, and also assure security on the reading or accepting the report, and simplify the business flow. Lastly, sustainability, to make the entire these 4 core element become sustainable. Hence, we can increase the so-called stickiness of the company and client relationship. Hence, from this, I think we are doing forming a very good fundamental T&C and I as a science-based approach to support the EIG space, where you need engineer or scientists to indeed sign off the emission data source and reduce the leakages to increase the accuracy. So this is actually what we are looking at. And not only that, this particular experience in Southeast Asia, especially Malaysia and Singapore, we can actually export back to China. From one side, that they are busy in creating tension, they are foregoing sustainability. They are saying climate change is fake, but being a human being, we are actually undergoing lots of sudden flood, and also the heat warms actually hit the entire space, especially last few weeks in Chinese New Year. Again, this is real. Hence, I think on the other part, which is China, they are doing quite a lot. They are very aggressive to actually decouple their entire nation. So for one side, they're foregoing, for the other side, they're accelerating. So giving us a good opportunity to bring the technology, knowledge, know-how, methodology into China that actually can tap along the opportunity right now. China, to a certain extent, has been actually setting the decarbonization journey. The target, I think, 5 to 10 years earlier. 2030, they need to decouple 50% or more emission already in their targets. Hence, I can foresee ACC may not only focus on novel food registration, they may also focus on sustainability-related, climate change-related business segment in China. Next one. That's my statement. I think highlighted in no traditional lab testing company like us last time, 30 years ago, to comprehensive transform into EIG assurance space, powered by regulation lead scopes, regulated concern-centric. So next one. This is the last slide that I think from NewSmart, cited from NewSmart 2 weeks ago, research and ourselves study on buying. They call for buying, and valuation is slightly lower because a lot of people thought we are traditional lab. And we also hosted a new researcher yesterday in Johor Bahru. So we are open for those investors that really come over to visit our tree in Johor Bahru. I think we can contact GenCom. We can arrange. You all come over for a day trip, enjoy food, enjoy laboratory, listen to a story in Johor Bahru across the causeway right now. So this is actually, I just want to highlight before I end, use all the information with care, study in depth, the pro and con of the company, and we did very confident. 27, 26 will be the good year for us compared to the previous year, because we are seeing the transformation impact for all the segments. Right. Thank you very much.
Thank you, Dr. Luis. I think that's a very comprehensive briefing that you provided for all of us. We do have some questions already, but I'm probably just gonna start off the questions with from your financials. I think we saw a strong, like you say, robust revenue growth in FY 2025, right? But there is also I think partly due to the acquisition of Anchor Technology, right? So could you elaborate how much of the growth that we are seeing in FY 2025 was organic versus inorganic contribution?
Organic, I think it's nearly 10%, nearly about 9.1% on Malaysia itself. Yeah, based on testing, business testing division leading the growth, the path. The rest one is actually MA through the inorganic growth for ACC.
Okay, can. I think the next question is in line with what I wanted to ask also. I think it's talking about your margin. I think the EBITDA margin from Bloomberg shows that it's at around 35% range in 2025. Sorry, since 2024. Is that the level that we are expecting, or you expect to see some improvement on the front?
You mean the PAT?
EBITDA margin.
EBITDA margin is for 30%. Yes, I think we are quite stable. However, when we integrate ACC come in, it will be having some adjustment. We still want to understand and also control the thing. If without ACC, I think it's 30% on EBITDA.
I see. So with this acquisition, you expect it to take a while to normalize, is it?
Yeah, we take some time to normalize. This is mainly due to ACC highly relying on the international expert or foreign expertise to indeed support and review whatever paper they put up into US. But we already counterbalance or trade off this by forming ACC Malaysia, Sembilan Berhad last year, if you follow through our announcement. This is actually to create the local tenant, which is multilingual, to take over certain job, not to outsource the cost to the foreign expertise. And our team in Malaysia right now having about 7 Malaysians that can multilingual and proficiency and to help to reduce the cost. So over the time, I think there is some balancing between outsourcing for foreign expert and also internalization by our own group of people.
Okay. Just wanted to know, I think we talked a bit of China just now, and I look at the numbers. I think if I remember correctly, it was about 100% growth from China market, right? And just wondering, you expect that to continue to be the case over the next few years, the key growth drivers to be driven by China, or is it going to be coming from Malaysia or any other markets that you're intending to expand?
On China, definitely yes, because last year we only plugged 6-month data. Yeah, you can see a very significant growth. And this year we will plug in 12-month full data. So I always say this year's definitely better than last year's. Yeah, compared to last year's better than the year before last year's. So this is the trending that we can see almost for sure. From Malaysia perspective, they are relying on other business segment or other business activity, other investment opportunity. Currently, Malaysian government are tapped along like data center. Is booming in Malaysia, so they require testing as well because it's quite high emission on that particular and high energy consumption. They use a lot of energy and also water. On top of that, medical device are doing very strong in Malaysia right now. So these two are remaining a very good, leading market segment that actually can bring organic growth further in Malaysia. Apart from that, other business segment like look at SaaS and look at the training and assurance that is tagged along. That's an opportunity for us to indeed export this particular successful business model from Singapore outside into a couple of newly appointed region operator in the region. So hence, outsourcing SaaS and also licensing SaaS is one of the good probably spectrum that actually be more offered and see good revenue for the group in 2026.
Okay. Your acquisition of about, I think, 75% SCC in last year also marks a major move into the novel food industry. How's the integration progressing so far? And is there any cross-selling opportunities that you have identified?
I think just to add on, because they are breaking, right? Acquisition is 75% on ACC. Apart this 75%, 70% is by share, LMS share, and 30% is by cash entry tranche. So it shows that Chinese are very confident on LMS and they are looking forward very looking forward to expand their footprint into ASEAN. Yeah, and also we promise to bring our technology know-how back from ASEAN into the China right now. I think it's also aligned with the storyline, aligned with the competitive landscape right now. We're talking about China plus one or China plus two, and ASEAN always, Malaysia, Singapore always, Commonwealth always, Muslim OPEC always, EU always their springboard. So they will pick Singapore or Malaysia as a springboard to other side of the world right now. Yeah, I guess this is quite grow. It's a good grow spectrum that we are doing. Integration wise, yes, with the phase one completed, yeah, we put up all the system in place. Our SaaS also activated, and they are using our SaaS to actually normalize and also ejecting data inside. That's on the phase one. The other phase one is actually looking at the policy as well after the PPA, after the IA completed in a couple of weeks ago. We see the gap, and then we patch back. We patch back with all the policy to govern everyone online. So these 2024, 25, 26. There's a phase two. Yeah, phase two is more on operational. Yeah, operational integrations and also business opportunity integration. As I mentioned to you, EIG space are doing so good and growing so fast is in China right now, because one part is actually ongoing, the other part is accelerating. So I'm sitting on the accelerating wave. So just follow through. And at the same time, in China, they are looking forward. Hey, can I do more in ASEAN? What can I do in ASEAN? What ASEAN want? So that actually blend very well when we in China. I said I'm from ASEAN, I'm from Singapore. So that open up a lot of business opportunity, how we actually can take along two country resources. For novel food, I think they are more pick up the Singapore because of very highly sophisticated research-based and then knowledge-based technology. So that's for manufacturing, they will pick Malaysia due to the land, the advantages on physical or resources. So every ASEAN country play a very good role, and I'm promoter of these two countries right now too, to China counterparts.
Okay. And I think you also mentioned a bit on your EV and inspection business that you've expanded, right? So how long do you think that will for that business to take to before it start to contribute more meaningfully to the group? I think at this point it's not too large, right, in terms of the contribution.
No, for business opportunity of this inspection of EV, we are not blindly, try to explore. Indeed, we're already knowing market size, knowing the numbers in the next 1-2 years, but I cannot, because of the announcement. And luckily or not, if you invest on LMS, we are fully compliant and we are highly regulated company. We cannot produce result or services without accreditation. So inspection also similar. We need to be accredited by the accredited council, as example in like SAC or Department of Malaysia or CNAS in China. So get it accredited so that we can actually open up ourselves for to actually getting the business in. So the accreditation has been in the phase one. Then we are doing the reviewing, and now we are looking forward probably Q4. That's a worst case, Q4 to launch it or official these services. Right now, we are actually doing a lot of the business that actually to scout around how many willing to forgo the old one and get us on board. I think we already get a good numbers. Just accreditation needed time because it's subject to the speed of agency.
Okay, understand. But it will be coming mainly, you've been focusing mainly in China or which market for this?
China.
China, right?
China EV into ASEAN.
Okay, all right. And then I think you also talk about ESG quite a fair bit. So I think it's interesting, but how are you going to compete with a lot of the the competitions, especially on the large international ESG auditors that are already in the market, right? What are some of the strategy and what are your advantage that you can share so that we can have a
initially I think it's quite piecemeal, then we conceptualize. Now we actually consolidated all the ESG related business segment under the big name called decarbonomics. decarbonization plus economic. We call it decarbonomics. This decarbonomic having at least six activity. First one is to measure. Second one is to report. Third one is to verify, MRV. Then you use this particular verified emission intensity for your marketing, for company to do marketing, put the carbon footprint into all the labeling. You look at current food labeling right now, other than nutrition labeling, like there's lack of carbon footprint. You consume one packet is actually you emit how much of carbon. So huge opportunity because it will be now maybe non-mandated, but in future it will be regulated. I think all the product that we use, there's a footprint there. You know how much. Then later on, our subsidiary and also our associate Prismatic can come in to help to decarbonize their activity, decarbonize the production. So that is formed at the fifth of the element of the entire cycle. Then lastly, you would like also probably look at the space to decarb and also become a carbon asset area of this particular activity. So it's actually a closed loop round and then economic that it can actually spin how fast from one to another. So for this particular decarbonization economic, at least we link testing, because testing form the fundamental for quantifying emissions. We are scientists compared to others non-science-based service provider. We can sign off not only one and two. We even can sign off many. We already have 80 numbers of use case sign off based on scope 3, comprehensive scope 3, upstream, downstream business, the waste, purchase of product, use of services are under all the so-called scope number 3. I guess that is our advantage. Not only that, we have our own apps, our own SaaS, our own carbon counter, and carbon counter was actually being listed in the SPF, as one of the net zero decarbonization solution. So all these, I think we control the cost very well, and we also are independent verifier. So the MRV linking, very very complete on the entire ESG space.
Okay, so just to understand a bit, so your competitors, the bigger name, the international auditors, don't have this capability, is it?
I think we come from different school of thought. They are coming in from ISSA 3 or 5000 series, which is fully looking at numbers based on ISRS standard whatsoever. That is accounting standard. We are looking at international standard of organization, ISO standard. We are looking at numbers of scope 1 and 2 and 3, which can be spin, can be enlarged, and end up this actually particular data can be used in the carbon footprint. So it's totally different school of thought. One is 17 standard, the other one is international standard. And I cannot say which one is better. As far as I'm concerned, ISSA standard are looking at entire ES and G. However, we are subject expert on emission. The standard of ISO 14-1, 2, and 3 are only looking at emission data by itself, never touch about S, never touch about G. And of course, ISO also come up 14019, 14019 standard to carbon another remaining S and G. So there will be another area that we are looking at, looking to enlarge our basket that we can provide similar ISSA 5000 assurance standard. Just touch about this. I think we won a big project in Malaysia right now recently for providing reasonable assurance to a public listed company in Bursa, and they are one of the index. It's one of the index, so it's a good sum. Just got it yesterday about to provide 150 numbers of their supply chain on this verification only.
I see. So just wondering, so these businesses will mainly be coming from Malaysia, China, or Singapore?
Now I think mainly is Malaysia plus Singapore. Because we already collected easily verified emission intensity various industry. We have plastic industrial, metal, transport, tourism, semicon, medical device. This was presented to SPF. They are very interested to work together. What can for me, we are having this factor, but this factor how can we help other intended user to calculate their scope T. So we will tag along, So this is actually form a fundamental and use case that China can adopt. So we come out our own methodology, to do the decarbonization. This particularly has been also discussed thoroughly in China. Look for partnership that actually can bring along our methodology into the China, and we can actually launch together. So stay tuned. Maybe we'll make a recent trip to talk more detail on that basis. So it's a reciprocal relationship between China and us right now.
Okay, you got quite a lot going on in different parts of your business, but I also want to touch a bit on this. I think you talk a bit on your in-house conformity assessment technology and the SaaS products. Could you share the adoption rate as well as plans to transition some of this revenue into a recurring subscription model, or if it is already in? So yeah, maybe just let us know.
For IKIN, I think the first IKIN we launched, we commercialized earlier. And in terms of IKIN, we have two licensed operator right now in Malaysia. They subscribe, they turn it into SaaS income. On top of that, we have boarded about 3,000 active user in IKIN. And this IKIN active user can become our client as well on this thing. But that business model talking about, we are actually realigning and adjusting the business model, same business model, SaaS, IKIN, into China space right now, not in ASEAN, in China space, where they are more open and they are also want to enable expert-oriented sampling and also testing. So we are actually internalizing and localize the SaaS content that can suit for China TIC operator. So that is actually we are doing right now. On top of that, I think IKIN. On top of IKIN is iZen. iZen is actually a SaaS that much more largely adopted and utilized. We have over near to 100 adopted right now. So same IKIN and also iZen, we also presented in operator in China that we are coming not only for verification, we're coming with technology and also carbon counter which is also accredited and accepted by SBF in Singapore. So we are very happy to work together on that basis. Another two more, I think we put a very high expectation, relying on our associate company called Prismatic. Prismatic also run one SaaS, they call it iHo. iHo is decarbonization SaaS. We help company decarbonize while using deploying of the IoT, real-time IoT data collection. And that particular activity, I'm very confident, 2026, you will actually lift up the entire figure of SaaS from the iHo perspective. Lastly, iSIN is still tier one. It's actually a mark that actually allow client to scan, access into the information, how good is quality of that particular product. That one adoption is currently still on free, on trial, on free. We on board about nearly to 500 adopter right now. Nearly to 500 adopter right now that actually in tier one. So we will slowly want to move them to tier two and also achieve tier three. That's our roadmap of digital journey. Capture into that entire concept called quality infrastructure that we are building right now.
Okay, I think lastly on growth as well, you talk about I think the escalating regulatory requirement in the region. Is there any specific upcoming deadlines or mandates in Malaysia or some of the markets that you're in that could be some of your immediate catalysts to drive demand on your end in the next 6 to 12 months?
In 2026, I think up to today, Malaysia still did not defer IFRS reporting, unlike Singapore, deferred by 3 to 5 years. So that's an opportunity for us that test Malaysia IFRS. Same thing go to China. They didn't defer. They still continue IFRS reporting for all of this scope. Hence, this can be actually become a very good playground for us to use Malaysia and China to do this activity. Upcoming, I expecting in China especially, this is all public access information. I think China are doing very, very rapidly improve the emission. they improve or decouple their emission. They're coming out a lot of target. They're coming out a lot. So I think they run state-owned 7 numbers of ETS in China right now. So I guess that particular policy are very good, and we call it Tan Hui. Tan Hui is carbon sink project using the original jungle or the turf to do decarbonization. So activity are very rapidly actually happen in China. And on our own hand, in Malaysia, we also lately one of our important personnel was accredited by Gold Standard, being a verifier for this project, decarbonization verification for the world. So hence, I think with all these, I think we can do more actively, with or without. If you without like mandatory, then we create the carbonomics, the quality, the standard that actually to enhance the economic cycle for adoption, early adopter of the sustainability approach for the SME and client.
Okay. I just want to move on a bit on your asset and your balance sheet. I think you'll have quite a strong net cash position, right? And beyond your current, I think 3 or 4 accredited laboratories in Malaysia, is there any specific Southeast Asia market that you're targeting for physical expansion, or is there any other M&A? I think you just done one last year, right? So is there any that we can expecting?
We pick China. Yeah, I think this is the most important and difficult one. For me to convince my board, I take a month. And I also prepare for probably a year to convince the board by using internal proven wise third-party comments. So I think we done that. We have good experience on how to do M&A. It's still subject to the willing seller unit basis, willing seller or willing buyer basis. There's a very active M&A negotiation throughout the region right now, especially those particular region that have agency. So the agency help us to do business opportunity scouting. At the same time, also looking at become a potential partnership of venturing into the laboratory acquisition. However, now we have additional option right now. Instead of using shareholder minority fund to actually acquire lab, that is actually primary looking forward. However, the secondary, we can actually license the SaaS, and indeed less CapEx dependent to reach the region, because SaaS is sunk cost. For me, it's a sunk cost, and you can turn the sunk cost now to become an investment. We turn it to investment in later stage. So you make the M&A more secured and more sound, because you already have the data.
Okay. And just in terms of adding values to shareholders, I think you've proposed a higher final dividend recently. So do you plan to have a formal dividend policy, or do you think you can maintain this sort of payout ratio that you're looking at?
Definitely dividend is one of the way that being a catalyst, markets to outshine others. Looking at financially sustainable perspective, I think we can do that. And financial sustainability is actually one of my material matters in my sustainability report. If you look through the sustainability report wrote by me, financial sustainability is one of them. Hence, I guess we will continue to put our best effort to give dividend, and also we proved that previous 2 years we are also following a same pattern by dividend and also bonus issue that to enlarge the entire ownership of the company right now. I think the answer is yes. We do have a dividend policy on the sustainable financial built up based on sustainable financial perspective.
Okay, I don't take too much time, so just going to jump to the last question, basically on risk. What are some of the key risks and challenges that the group is facing that you could share with us, so that we know what to look out for?
The risk is actually more because growth based on regulatory lags. Yeah, this is actually already hit. Regulation change will give us a visa. Regulation change means no longer required for that particular activity or reduce the frequency. They will definitely impact the group frequency of having engagement. Hence, that is a risk, regulatory risk. Regulatory risk on top of forgery, changing result, and then getting sued by things that is our professional insurance cover the risk. However, for being a company, how we counterbalance, because you yourself as a CEO wrote your sustain reporting, then this come into the picture. Hey, what happened this? What is your mitigation? What is your budget? What is the impact on? I think if really interesting, you can go through my SR for entire adoption of ISSB S1 and S2. I can articulate over there very clearly. But for us, we create demand. Yeah, instead of too depending on sitting on top of regulatory initiative, mandated testing, we also create demand. Decarbonomics is actually self-create demand cycle that. Not only that, just now I mentioned to you the IC, tier 1, tier 2, that is also another sub economic cycle that we want to inject into business. So we are doing that, not only sitting out, knowing that this is actually regulatory oriented business, but we want to create our own demand. Creating demand is actually, you need creativity, you need system, you need also a bunch of talent that actually can grow together.
Okay. All right. Thank you, Dr. Lewis, for your time. Thank you, everyone, for joining us. All right. Have a good day. All right. Thanks so much.
Thank you. Bye-bye.
Bye.